The FOMC's assessment that it can be patient in beginning to normalize policy means that the committee considers it unlikely that economic conditions will warrant an increase in the target range for the federal funds rate for at least the next couple of FOMC meetings. If economic conditions continue to improve, as the committee anticipates, the committee will at some point begin considering an increase in the target range for the federal funds rate on a meeting-by-meeting basis. Before then, the committee will change its forward guidance. However, it's important to emphasize that a modification of the forward guidance should not be read as indicating that the committee will necessarily increase the target range in a couple of meetings. Instead, the modification should be understood as reflecting the committee's judgment that conditions have improved to the point where it will soon be the case that a change in the target range could be warranted at any meeting.
Well, I think she's left herself an enormous amount of flexibility here, and I think the markets initially worried a little bit about some of the early parts of the statement. Now, instead, we saw the dollar go up a little bit. We saw bond yields go up a little bit. Now they're returning back to where they were before the statement came out. So I think people are learning that the Fed is hanging on to that flexibility. And I would still maintain it's, in my mind, 50-50 whether we see a rate hike this year or not.
Janet Yellen, Mandy, she has been a dove. She remains a dove. I read the FOMC, and I have a bias in this. I mean, the FOMC minutes, I thought they were dovish. Today, Yellen, in my mind, was definitely dovish. So I have a stronger opinion about that than I think maybe Nick or Steve Leisman. But, you know, in my mind, our official stance is we're going to see a hike at some point this summer. Now, that could be June to September.
I think we're a little bit closer, Mandy. I think markets were still somewhat concerned about the exact language the Fed was using in the minutes and the releases most recently. And I think today's testimony really begins to clear that up. It looks like a very clear, long runway of low rates for a while longer, and it does help. At the margin, it does help U.S. stocks a little bit more because I think investors were looking at Europe as the most interesting place to invest. But now that we've got this clarity back in the U.S. market, perhaps we'll see some money flows come back here.